Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2025, February-March, Paper 4-2, question number 1. This is a structured paper 4 which consists of 2 questions. Each of them will be of 25 marks and the total time limit for the paper is 1 hour. So ideally, you should be able to solve each question under 30 minutes. And in this video as well, we'll be attempting to solve this question number 1 under 30 minutes. So without any further delay, let's get started. TPLC is a manufacturing business which uses activity-based costing to apportion certain costs. The following information is available. The company manufactures 2 products, X and Y. Annual production is 1,000 units for X and 3,000 units of Y. The unit production cost of the products are as follows. We have been given the per unit values for our direct materials, direct labor, direct overheads, quality inspections, machine setups, and factory rent. And we also have the total per unit cost for each of the product. Then costs are apportioned using the following basis. So we have been given the basis for each of the overheads as well. For the quality inspections per year, it is to be divided based on the ratio 300 is to 500. Then machine setups per year is to be divided based on the ratio 40 is to 65. And for factory rent, we are dividing it based on the number of units for each of the products X and Y. Then selling prices are set at production cost plus 50%. So 50% is given to be our markup in this case. Let's take a look at the first question. We need to discuss whether or not apportioning the factory rent on a per unit basis is the most suitable way to apportion that cost. As we can see, here the factory rent is being divided among 2 different products based on their number of units, which is not really realistic because floor area might be a more suitable basis while apportioning our factory rent. Let's write it down. It may not be realistic and floor area might be a more suitable basis. That is all for this part. For the second one, we need to discuss whether or not setting selling prices by use of a fixed markup is the most suitable way to set them. So in this case, we are considering 50% markup, which means that we are adding 50% of our cost as part of our profit in order to set the selling price. It is quite simple to apply, but when we are considering a rate of 50%, we're not really considering the price that the competitors may be charging. So our product may not have a competitive selling price in the market. Let's write it down. It is simple to apply a markup, but it does not consider the price that competitors may be charging. Alright, that is all for the first part of this question. Let's move towards the second one. We have some additional information. The company is considering starting production of a third product, Z. Until this point, we only have 2 different products, X and Y. This would affect costs and revenues as follows. The number of units of X and Y being manufactured would be unchanged. It means that we can still use the given number of units, 1,000 for X and 3,000 for Y. Let's write it down. So for X, it will be 1,000. For Y, it will be 3,000. Then production of Z would be 2,000 units per year. Then the direct cost of X and Y would be unchanged. So we can still refer back to the same direct material cost per unit as well as the direct labor cost per unit. The total direct cost of 1 unit of Z would be 34. This is the total direct cost, which means that this is a combination of the direct labor per unit as well as the direct material per unit. Then products X and Y would continue to have the same number of quality inspections and machine setups. Product Z would have 500 inspections and 50 setups. Let's write it down. So 500 inspections and 50 setups. So that will be the basis on which we will apportion our overheads. Then, because of the increase in the number of quality inspections, an additional inspector would have to be employed. This would double the total cost of quality inspections per year. So now our new quality inspection cost will be 2 times the previous value. Then the increase in the number of machine setups would increase the total cost, which would become 13,020. So this is the new total cost for the machine setups. The increase in production would necessitate the rental of additional floor space. This would increase the total cost of factory rent, which would become 30,000. This is the new total cost for the factory rent. This would continue to be apportioned on a per unit basis. Let's take a look at the next question. We need to calculate the total annual cost of quality inspections if production of Z takes place. We already know that the new value for our total quality inspections cost would be 2 times the previous value. So the first thing we need to do is figure out the previous total for our quality inspections. We can see that the quality inspections per unit value is given right here. So 2.34 per unit of product X and 1.30 per unit of product Y. In order to get the total value, we can just multiply these per unit values to the number of units for each of these products. So that would be 1000 times 2.34 plus 3000 times 1.3. Let's write it down. So for X, we have 1000 units, and the cost per unit, which is the cost of quality inspection, is 2.34. Then for Y, we have 3000 units, and the cost of quality inspections per unit was 1.3. This will give us the previous total cost of quality inspections, but we need the new total cost if the production of Z takes place. That would be 2 times the previous value. So we just need to multiply this by 2. And this will result in the new total annual cost of quality inspections to have the value of 12,480. That is all for the second part of this question. Let's move towards the next one. We now need to calculate the increase per year in the following costs, which would occur if production of Z takes place. So for machine setups and factory rents, we were given the new total value. This is the total for our machine setups, and this is the total for our factory rent. So we just need to figure out the increase, which means that we first need to figure out the previous value as well, and then we would just have to subtract the previous total by the new total. Let's do that process for machine setups. The new value is 13,020. So we can start with that value. Then we will subtract the previous value. So we'll figure out the previous value for machine setups in a similar manner to how we calculated the total for our quality inspections, because in this case as well, we have been given the per unit cost for the machine setups, 3.6 for X and 1.95 for Y. So we can just figure out the total by multiplying it to their respective number of units. So for X, we have 1000 units, and the machine setup cost per unit was given to be 3.6. Then for Y, the number of units is 3000, and the machine setup cost per unit was given to be 1.95. Now we can easily figure out the increase in the machine setups, which in this case is 3570. Let's repeat the same process for factory rent. We will start with the new total, which was given to be 30,000. Then we will subtract the previous total. So for previous total, for rent as well, we have been given the per unit value, which is 6 for both the products. So we can calculate it at once. We can just add the total number of units and multiply it by 6. So that will be 1000 for X plus 3000 for Y multiplied by 6. Now in this case, we will get the difference between the new total for the factory rent and the previous total for the factory rent to have the value of 6000. That is all for the third part of this question. Let's move towards the next one. We now need to calculate the selling price of 1 unit of each product if production of Z takes place. In this case, we have been given markup. So in order to figure out our selling price, we first need to figure out the per unit cost for each of the 3 products. Let's do that. We have X, Y, and Z. Now we can start with the total direct cost, because in this case for Z, we have been given the total direct cost and not the individual values for our direct material and direct labor. So that would be 34. and we can label it as the direct costs. Then we would have to calculate the same thing for product X and product Y. So for product X, okay, in this case, we have three different items: direct materials, direct labor, and direct overheads. The sum of these three values will result in the direct costs. So for X, that will be 14 plus 12 plus 10, which will result in the value of 36. And for Y, that will be 15 plus 15 plus 11, which will result in the value of 41. Let's write it down. So that's 36 and 41. Now we can divide our overheads. So the very first overhead we had was the quality inspections. Now I'll just do my workings right here. So I have quality inspections. And we need to take the new total for our quality inspections, which we've calculated right here. That's 12,480. So we need to divide this value based on the number of quality inspections per year, which was given to be 300 for X, 500 for Y, and 500 for Z as well. So we can easily cancel out the last two zeros for each of these three values, which will give us the ratio of 3:5:5. So based on this ratio, we will have to divide the value of our total annual cost of quality inspections. So 3:5:5. We have X, Y, and Z. The value for X in this case will be 2,880, and the value for Y and Z will be 4,800 because both have the same ratio. But while calculating our selling price, we are considering the cost per unit, and these are the total costs for quality inspections. In order to get the per unit value for the quality inspections, we would just have to divide these totals by the number of units. We know that X had 1,000 units, Y had 3,000 units, and we were told that Z has 2,000 units per year. Now for the per unit value, we will just have to divide it by 1,000, divide this by 3,000, and divide Z by 2,000. For X, this will result in the value of 2.88. For Y, this will result in the value of 1.6. For Z, this will result in the value of 2.4. Let's write it down. So that's 2.88 for X, 1.6 for Y, and 2.4 for Z. Now we will repeat the same process for our machine setups as well. So for machine setups, again, we will have to take our new value, which was 13,020. So we have machine setups, where we have to divide 13,020. And the ratio is the number of machine setups per year, which is given to be 40 for X, 65 for Y, and 50 for Z. So the ratio will be 40:65:50. Let's write it down. So the value for X in this case will be 3,360. The value for Y will be 5,460. And the value for Z will be 4,200. Now again, we need the per unit machine setup cost. So we need to divide it by the number of units. So divided by 1,000 for X, divided by 3,000 for Y, and divided by 2,000 for Z. So for X, the value will be 3.36. For Y, the value will be 1.82. For Z, the value will be 2.1. Let's write it down. So that is 3.36 for X, 1.82 for Y, and 2.10 for Z. Now we have factory rent as well. And in this case, the factory rent is to be divided per unit, and we want the per unit value, so we can easily get the value that we need. And in this case, the value for all three products will be the same because we are dividing it based on the number of units. Now let's take a look at the total factory rent, which is 30,000. So the per unit value will just be our total factory rent of 30,000. Then we will have to divide it by the total number of units for X, Y, and Z. So that will be 1,000 plus 3,000 plus 2,000. This will result in the value of 5. So we need to write down 5 for all three products. So that's 5 for X, 5 for Y, and 5 for Z. Now we can figure out the cost per unit. We'll just have to add all of our costs. So for X, that will be 36 plus 2.88 plus 3.36 plus 5, which results in 47.24. For Y, that will be 41 plus 1.6 plus 1.82 plus 5, which results in 49.42. For Z, it will be 34 plus 2.4 plus 2.1 plus 5, which results in 43.5. Now, in this case, we need to figure out the selling price. So we need to implement our markup, which will result in the profit. The markup given in this case was 50%, so this will just be the cost per unit times 50%. For X, that will be 47.24 times 50%, which results in 23.62. For Y, that will be 49.42 times 50%, which results in 24.71. For Z, it will be 43.50 times 50%, which results in 21.75. Now, in order to figure out our selling price per unit, we just need to add the cost and profit. So for X, that will be 47.24 plus 23.62, which results in 70.86. For Y, that will be 49.42 plus 24.71, which results in 74.13. For Z, it will be 43.50 plus 21.75, which results in 65.25. That will be all for the fourth part. Let's move towards the next one. We have some additional information. The directors think that in the second year of production of Z, the company should reduce the number of quality inspections it makes for the new product. Advise the directors whether or not they should reduce the number of quality inspections of product Z. We need to justify our answer as well. Let's take a look at the marks. This is of 7 marks. So 1 mark will be reserved for our final decision. 3 marks will be for why they should reduce the number of quality inspections of product Z, and 3 marks will be for why they should not be reducing the number of quality inspections of product Z. Now, we're talking about the second year of production of Z. During the first year, obviously, the production will be well established, so it should be pretty clear to the management that quality will be satisfactory in the second year as well, due to which we can reduce the number of quality inspections during the second year. Let's write it down. Once production is well established, it should be clear to management that the quality is satisfactory. Now, the next thing we need to consider is, will it have any impact on the total cost of the quality inspections? Because if the quality inspection staff have fixed salaries, then the total cost cannot be reduced. Let's write it down. If the salaries of the inspection staff are fixed, then the total cost cannot be reduced. And if the total cost cannot be reduced and we are reducing the number of quality inspections for product Z, it will have an impact on the allocated value to the remaining two products X and Y as well. Because since we are decreasing the quality inspections number for Z, a higher portion of quality inspections cost will be allocated to product X and Y. Let's write it down. The inspection cost apportioned to products X and Y will increase. And if we are reducing the number of quality inspections for Z, it can directly have an impact on the quality as well. The quality might be reduced. Let's write it down. Due to the decrease in the number of quality inspections for product Z, its quality might be impacted. And if the quality for product Z is lower, then it will obviously affect customer satisfaction as well. Let's write that down. As a result, it may affect customer satisfaction. Now, let us consider the additional information as well. I think due to the introduction of product Z, an additional inspector would have to be employed. So we have another member of staff who has been employed. In this case, since an additional inspector is employed, but we still need a lower number of inspections, what we can do is we might reduce the hours worked by each of the inspector. Let's write that down. Since a new quality inspector was employed, the number of hours worked might be reduced because of the decrease in the number of quality inspections. All right, we have 6 different comments. Now, based on these factors, we need to make a final decision. So, in this case, I would advise the directors not to reduce the number of quality inspections, because if the number of quality inspections are being reduced, then definitely the hours worked by each of the quality inspector will also have to be reduced, and that might act as a demotivating factor for the other employees as well. Let's write it down. The directors should not reduce the number of quality inspections of product Z as the decrease in the number of hours worked might act as a demotivating factor for employees. Alright, that's all for this part as well as the entire question. If you found this video useful, make sure that you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of the videos in the future. Thank you.